In 7 words, Fed Chair Kevin Warsh may have just confirmed the kept the tone centered on communication services and consumer discretionary. Welcome to your daily market briefing for 2026, 7/15. We will walk through leadership, macro context, and what matters next for the next session. Here is the broad market snapshot. S&P 500 was up 0.38% and closed at $7,572.40 US. Nasdaq 100 was down 0.28% and closed at $29,502.60 US. Dow Jones was up 0.29% and closed at $52,658.64 US. Next, the ETF curve set shows where relative strength and weakness develop through the session. Leaders were communication services plus 1.73%, consumer discretionary plus 0.93%. Laggards were technology minus 1.08%, utilities minus 1.04%. Across global markets, the session leaned constructive globally, with most major regions holding up. Asia was under the most pressure, with Japan and Shanghai leading the retreat, while Shanghai in Asia held up better than the rest. Stepping back, the broad market traded with a firm tone as SPX closed plus 0.38% and NDX finished minus 0.28%. Leadership came from XLC, XLY, while pressure showed up in XLK, XLU. The stock market fear and greed index is 46, which sits in neutral. That suggests positioning is more balanced, and the next macro catalyst may decide direction. Daily market history shows 4 of 4 core ETFs above their 200-day averages. Dow ETF has the strongest 20-day trend at plus 1.45%. 1 core ETFs are within 1% of a 52-week high. This is useful because a close near highs means something different when the same symbols are also holding above longer-term moving averages. Volume data shows 1 tracked symbols trading at least 20% above their 20-day average, while 7 were at least 20% below normal. The strongest participation signal came from financials at 1.37 times normal volume. I treat this as a confirmation layer, not a standalone signal, because price can move on thin activity, but follow-through usually needs participation. Among mega-cap leaders, Apple had the strongest 20-day trend at plus 10.49%, while Microsoft was the weakest at negative 1.03%. That helps separate index-level strength from the actual mega-cap stocks that often decide whether the move has durable leadership. On the S&P 500 heat map, leaders were communication services plus 1.73%, consumer discretionary plus 0.93%. Laggards were semiconductors minus 2.23%, utilities minus 1.04%. The market is still trading through the Fed lens, with investors using data points such as upcoming macro releases to refine expectations for the next policy move. If the incoming data runs hot, rate cut hopes could be pushed back and pressure duration-sensitive sectors. Commodity action was split. Crude oil led, while gold lagged, so the move looked selective rather than broad-based. The index board leaned higher, with Dow carrying the weakest tone and Nikkei holding up best. Mega-cap curves were mostly positive, which points to a broad tone move, more than a single-name story. Forex showed a risk-on currency tone, with the sharpest move in USD/JPY and the best relative strength in GBP/USD. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mixed to lower, so rates still mattered for the session. The main focus stayed on leadership, stayed concentrated in communication services, and consumer discretionary. The pressure point remained semiconductors and utilities. Into the next session, the key checks are the next macro events, the path of yields, and whether leadership broadens or narrows. Traders should also watch whether, in 7 words, Fed Chair Kevin Warsh may have just confirmed the stock market's biggest fear keeps driving headline risk. That is the key takeaway for today's market. The broad market traded with a firm tone, as SPX closed plus 0.38% and NDX finished negative 0.28%. Leadership came from XLC, XLY, while pressure showed up in XLK, XLU. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.